Hey, what's up my friends? How are you doing? So in this week's market analysis, I'll walk you through a few trades that I'm currently still in. I will share with you a few trading opportunities that I see in this market, and also to cover a little bit on the emotional aspect of trading, because when you're in a trade, the trade goes in your favor, most traders tend to get woohoo excited, and when the trade goes against you, you tend to feel the pinch, the pain. So again, I think it's good to for me to walk you through what are my thought process, how I'm actually feeling right now in certain trades, and to actually perhaps share with you the emotional aspect of trading that you can expect. So all this and more in this week's market analysis. I'll see you there. So first up, let's look at dollar yen. So dollar yen has been a trade that I'm in for quite some time right now. I think if most of you recall, I went long basically somewhere here. It's because I took reference from this swing high over here. I placed my order a few pips above the high in anticipation for a breakout higher. Had my stop loss just below this swing low of about 2 ATR. And you can see, in the first few days of my trade, price went in my favor. Most trader will feel ecstatic, like, woo hoo hoo. Price is going in my favor. Money's rolling in. And the thing is, shortly afterwards, ta-da! Didn't look too good, and price retraced all the way back, close to your entries. And this is where the feelings of emotion, right, the highs, has now faded away. And in fact, the negative aspect of your emotions has kicked in, right? Now you're feeling sore, you're feeling, you're feeling silly, and you're thinking to yourself, man, I should have taken profits earlier. Why did I, try to be greedy, try to, squeeze every pip off the market, and look, now price has retraced back against me. After a while, price started crawling back in your favor once more, and you started to feel better again. And then the next thing you know, bam! Price is currently traded at the lows of the range. So you probably feel quite a bit of emotional roller coaster, the ups and downs. And this is mainly due to the fact that you do not have a trading plan. Honestly, I do not feel this way because I have a plan. My plan is to trail my stops accordingly if price goes in my favor. My plan is to have a stop loss in place if price goes against me. So no matter what, even if the worst does happen, and if it does trigger my stop loss over here, fine. I'll take the loss and move on, fine. But if price goes in my favor over here and it breaks out higher, I'll just trail my stop loss accordingly. There's no point feeling so happy, feeling so sad, based on the random outcome of any one trade. Does not make sense. I can't predict what will be the outcome of this trade. Will it break higher this week? Will it retrace all the way back to my stop loss? I absolutely have no idea. The only thing that I can control is my risk. I can control where I will exit if I'm wrong. And I can control how I feel at any one point in time. And honestly, I'm feeling very neutral because I know trading is not about one trade. It's about the next 100 trades. It's about the next 1,000 trades. It's about the next 10 years, 20 years of your trading career. Look at the big picture, not just the random outcome of this particular trade. So for the dollar yen, well, price is whipsawing near my entry. It's going back and forth, right? Going forward, going backward and against me, right? So that's really for me, there's really no point trying to, stare at the ebb and flow of the market. Just put my stop loss down there where it makes sense, and I'll let the market do its thing. So that's all I have to say for the dollar yen. So let's look at another trade. I think last week, if most of you recall, the pound New Zealand, I said that if pound New Zealand, okay, let me walk you through why I was bullish on the pound New Zealand. Look at the weekly chart, you'll notice the pound New Zealand, in fact, broke out of the range some time ago, right? It has this range, which this is the resistance, this is the support area. We had a false breakout below support, and sometime, I think few weeks back, we had a breakout of this resistance, and price rallied almost, I think now it's almost 2,000 pips. Does it look like 2,000? Here's about 2.1. Currently here's near 2.3. I will say this is almost a 2,000 pip move. Then I said, on the weekly chart, well, price is pretty parabolic. It's hard to find a trading setup down here. Then I went down to the forward chart. I explained to you that on the forward chart, we can see patterns that we can trade. There are historical patterns that actually make sense, because I've actually plotted the 20 and 50 period moving average. The red line over here is the 20. The blue line is the 50. And if you notice, historically, price tend to respect both the 20 and the 50. The 20 and 50, the area between the 20 and 50 period moving average, is currently acting as dynamic support. And I mentioned that if Last week, if price does retrace back to the 50 period moving average, it is an opportunity to get long, because we have seen that, this area has a tendency to act as a dynamic support. So for traders who got long, well, good for you. Chances are you're currently in the money, but there's no reason still to be too excited. Watch how the market unfolds, right? Because there is a possibility that price could come back all the way back and retest the lows over here before rallying higher. So watch how your emotions are acting up, because don't want to get too happy, don't want to get too sad, because the market can really do anything to you. So for the pound New Zealand trade, that's all I have to say. Next up, let's look at New Zealand dollar, shall we? So this is the chart of New Zealand dollar. This is the forward chart. And again, you recall, right? New Zealand dollar, I went short somewhere, I think it was around here. Explained that a few weeks back, and price is slowly grinding down lower, lower, and lower. And again, all traders usually wish, for price to not just rocket through in their favor, meaning they hope to see something like this, just go in their favor. But do understand, when price is trending, it doesn't move in one direction all the time. Rather, it goes with an impulse move, followed by a corrective move, another impulse move, and another corrective move. So it looks something like this. You have a impulse move, a corrective move, an impulse move, corrective move, and an impulse move. So every time when price makes a corrective move, it tends to panic a lot of traders. As their open profits get reduced and reduced, they start to panic and they bail out and they exit. Usually over here during the retracement. And usually what happens next is, because the trend is still very much clearly intact, you can expect price to trade lower, and after which they realize they bail out their trade due to fear of giving back profits, and they miss the rest of the move. And this is a very common thing. So look at this New Zealand dollar chart, the trade I'm in. I'm still in because looking at a forward chart, you look at the trend is clearly very much still intact. You have a lower highs here, lower highs, lower highs. You have lower lows, and lower lows. So at this point in time, there's nothing telling you that the trend is about to end. So you can just trail your stops accordingly to the recent swing high. That is possible. So really, understand the ebb and flow of the market, and don't just make your trading decisions based on your emotions, because usually when you're trading based on emotions, it tends to be a suboptimal decision. So this is a New Zealand dollar trade that I'm currently still in. And how about let's look at the trade that I'm currently looking to stay out. And it's actually none other than crude oil. Notice that last year, crude oil had a massive smash downwards of almost, I think how much was it? From 120 to a low of $40, almost $80 slide. From here, all the way down to here, this massive down move. After which it did a double bottom here and here. And look what happened next. Price basically is in this consolidation over here. So in this kind of market, it's a market that I look to stay out of, because I don't like to trade within the consolidation, because price can just smack back and forth, and chances are I'll get stopped out of the trade. Longer term, right, the bias is still towards the downside, because you look at the weekly chart, well, the trend still very much seems to be intact. And if you ask me, what is happening right now seems to be a volatility contraction, because the volatility is actually shrink down here. And I do not know whether your trade higher or whether your trade lower. So I'll wait for a breakout in either direction, and I'll plan my trade accordingly. So right now, crude oil is a market that I will stay out of, and this is what I think. As a trend follower, this is what I will do. So that's all I have for you, boys and girls, in this week's market analysis. If you enjoy it, you can feel free to hit the subscribe button below at the bottom right hand side. And if you have any comments, just drop it below, and I'll get back to you as soon as possible. So with that, I wish you all good luck and good trading. I'll talk to you soon.